Air Canada shares jumping today, even though the company has trimmed its financial forecast for the year. You can see, of course, the stock has been on the slide over the past few months. Our guest says that earnings came in marginally below expectations, or at least his expectations, but he has a buy on the stock. Of course, one of the question marks here is how much pain will Air Canada feel if cross-border travel between the US and Canada comes down on a long-term basis? We're joined by Chris Murray, Managing Director of Institutional Research at ATB Capital Markets. Great to see you, Chris.
Morning.
Quite the rally for Air Canada today. Why are investors relieved, do you think?
Well, I think the key word there is relief. There was some concern that U.S. transborder travel could have been a lot worse than it really was. And so what we saw was the leisure portion of travel was weak. Places like Florida, Las Vegas, things like that. But the rest of the business seems to be holding up quite well. And then what they also talked about too is that international business to the Pacific, Atlantic, and Latin America is actually doing quite well. And, they talked about the fact that we should see a year, at least for Q2 and Q3, that looks a lot like last year.
Because they, of course, international is their strength.
Exactly.
Give us an idea, though, how much of their business is US-Canada? It must be a big chunk.
It is a big chunk. It's about 30%. But again, if you break it down into three buckets, you sort of have the leisure component of it, but you also have what they call sixth freedom traffic in the where U.S. passengers will travel through Canada to other parts of the world. And then you also have the regular business travel. And what they talked about is that both sixth freedom travel and business travel are still very strong. It's really only the leisure component that we're seeing the weakness in.
What is that exactly? Sixth freedom?
Yeah, exactly. So it allows passengers from the U.S. to travel to hubs like Toronto or Vancouver or Montreal, and then out to other parts of the world.
You have a buy rating, and your target is actually about $30, and the shares are 18 and change today, or actually closer to 17. So you do see prospects for nearly a double in these shares.
Yeah, I think there's a few things to think about. One, certainly the slide that you've seen in the stock has been over concerns about, what would tariffs do, and certainly the reaction the Canadians would have about traveling to the U.S. Going through Q1, which is generally a fairly heavy leisure travel period. Canadians like to go south for the sun. Yeah. And, what we saw was, good demand into the Caribbean and Mexico. That leisure demand did fall off in the U.S. as expected. And then there's some other compounding factors in Q1. We had the Delta crash at Pearson. And we also had a couple days where the weather was really rough. So the numbers themselves were impacted negatively by that. But again, those are things we don't anticipate will happen again.
And they are poised to buy back a whole bunch of stock, a substantial issuer bid of up to $500 million. So is their balance sheet in pretty good shape?
It's actually in excellent shape. It's probably, in fact, in the quarter, leverage stepped down a little bit. We look at the EBITDA versus leverage ratio, that stepped down to 1.3 times from 1.4 times at the end of the year. They are going to generate, somewhere a small amount of free cash flow probably this year is the way that we look at it. And so they have the opportunity with the stock where it's at to go buy back stock and continue their plan to rehabilitate the balance sheet.
Oil weak. I know it has got above $60 in trading today, but Air Canada, I presume, is a very sophisticated hedger, but they must be happy to see weaker oil prices.
Well, I think there's always a trade-off between what that does to the economy versus versus the actual price of energy. They did put on some hedges for Q2 and Q3, actually below where the price of oil is today. But as I said, that'll just handle what they've got booked for traffic right now, which looks pretty good.
I remember hearing years ago that the flights between Fort McMurray, Alberta and Las Vegas were one of the biggest transfers of human wealth in history. I guess the young guys, they've money to burn.
Well, and that's one of the things we like about Air Canada is that when you look at both millennials who want to travel and the boomers who want to travel, there's an underlying fundamental demand for Air Canada.
And what about the labour front? Do they have any talks coming up or potential disruption?
They do. They're through the talks with the pilots. That was completed last year, but they are talking with their flight attendants right now. But on the call, they described those talks as constructive and making good progress.
Thank you very much indeed, Chris, as ever.
Okay, thank you.
Chris Murray, Managing Director of Institutional Research at ATB Capital Markets. Up